The kind of discussions that happen at this conference really opens your eyes to a lot of innovations that are presently happening in our country in the financial inclusion space. I think it's a wonderful occasion for all of us to come together.
Hi, it's great to be here at the Inclusive India Summit 2019 in actually bringing big drive into financial inclusion in India.
The kind of discussions that happen at this conference really opens your eyes to a lot of innovations that are presently happening in our country in the financial inclusion space. I think it's a wonderful occasion for all of us to come together.
Hi, it's great to be here at the Inclusive India Summit 2019 in actually bringing big drive into financial inclusion in India.
Hi everyone, thank you for taking the time and joining us this afternoon. We hope your families and friends are healthy, and our best wishes to all those who are going through these difficult times. As you might know, over the last 16 years, Axis has been in pursuit of advancing financial inclusion in the country under its flagship Inclusive Finance India banner, bringing all stakeholders together to reflect on the enablers and impediments to financial inclusion. Within this, among others, Axis has been organizing a series of webinars throughout the year. In partnership with Fair Finance, a civil society-led coalition working towards ensuring a sustainable financial sector in India, Axis is organizing this very important webinar on practicing sustainable finance, what it means for financial institutions. And it is my privilege to welcome you all to participate in this important discussion. We have put together an excellent speaker lineup, and I would request Shreya from the Fair Finance team to introduce the topic and the panel. But before that, I will just quickly go over some quick points. Today's webinar is being recorded and we will be able to share a link with you after the event is complete. We invite your comments and questions, and you can find the Q&A chat box on your screen. If you have any questions, please at any point just put it in the Q&A box, and we will take it up with the moderator at the end of the session. With this, I would now hand over to Shreya to take the conversation forward.
Sure. Thank you so much, Priyamvada. As Priyamvada has already introduced me, I'm Shreya and I'm the program lead for responsible finance at Oxfam India and also the lead for Fair Finance India. I thank each one of you for joining us this afternoon for this webinar, and it's a pleasure to co-curate this webinar with Access. This session is moderated by Ms. Neha Kumar, who is the lead program for at Climate Bonds Initiative. The panel includes Ms. Shalini Warrier, who is the CEO IDFC, Mr. Mohan Teksale, who is the ex-CEO of Indian Banks Association, and Ms. Divyani Hari, who is the program director for Center for Responsible Business. Before I hand over the session to you, Neha, I just wanted to bring in a little bit of context on the work that Fair Finance India has been doing and on a very important research that we have come up with, and I would want to kind of highlight very broad outcomes of the research. We essentially at Fair Finance have a very structured methodology, and the Fair Finances are running across 12 countries in the world. And in India, through this methodology, we do our assessment of 8 banks in India, 4 public and 4 private. And in our second assessment, our first assessment was in 2019 and the second happened in 2020. There were some interesting results that we saw in our assessment, and I think probably those results will also help you bring in some context in this discussion. We actually realized that from a baseline study in 2019, essentially we see that some of the banks, specifically SBI and and HDFC, surprisingly did a little bit well in their carbon goals, specifically as they have now publicly disclosed policy on GHG emissions. So the policies that we look at are not the CSR policies, but there are core business policies of these 8 banks, and we essentially do not assess these banks on their philanthropic policies. Essentially, we also found out that the social themes somehow do not feature too well in the banks, because our agenda, when we do our research, we see that are these banks ensuring say labor rights in the supply chain, etc. But we see that none of the banks have publicly asked or looked for any kind of social disclosures when it comes to their lending practices. And we feel that it's time now, with the RBI also showing a renewed focus on ESG investing as well as ESG lending practices, this essentially forms an extremely important part right now. There are a couple of other indexes, but I will not touch upon those at the moment, Neha, and I just hand over the panel to you to kindly take the discussion forward.
Thanks a lot, Shreya. So first of all, my hearty welcome to our panelists, 2 of whom I've had the pleasure of working together. One is, of course, our former CEO of IBA, Mr. Teksale, under whose leadership IBA produced a set of guidelines which came to be known as responsible financing guidelines, which were basically an ESG framework for the financial sector. Devyani, who's been my former colleague at German Development Agency and who was looking at the SME part of access to finance, especially in the ESG framework. And I do hope that Shalini, we would through this conversation will actually find opportunities to further this conversation between us and also in the larger ecosystem. So just to set us off, I will give you a little bit of what is happening at the policy level right now in India, what have been the trends internationally. And as Priyamvada initially in her opening remarks again told us where we are in terms of COVID. I think to situate this conversation in the post-COVID era is also extremely important, especially for the financial sector role in not only recovery strategies, but a larger way of really looking at economic growth itself. So on the policy front, very happy to share that some things that we have been for a long time hoping and have been engaging has now been formalized with the Ministry of Finance, by the Ministry of Finance. They have put together a sustainable finance task force, which comprises regulators and other ministries. They also have 4 working groups. One of them actually is going to deal with the definitions of sustainable finance, what we will call taxonomies of sustainable finance for India. Second, we'll look at regulations themselves. And third, we'll look at, a sustainable finance roadmap for India. And fourth, we'll look at, putting together good knowledge systems and good practice case studies for people to have access to. Now, this shows, in a way, the broad pillars of how India is really looking at sustainable finance. I will go, briefly into a bit of a detail so that we can get into our discussion subsequently. The first aspect, which is taxonomies, is basically speaking to the fact that we do not yet have standardized definitions of what sustainable finance means. How do you identify what are sustainable economic activities? Now, that becomes an extremely important question with regard to the practice of sustainable finance. Second aspect is about risk and resilience. Now, this is very important because not only a firm's or financial institution's own performance and growth, but also the stability of the financial sector as a whole, keeping in mind the acute shocks that climate change can pose. And these are both acute and chronic. If you really look at, just simply the changes in rainfall and weather patterns and how it impacts agriculture, then you exactly know, what it means for inflation, what it means for employment, what it means, there's a huge lot of risk that a sector can pose. Similarly, other sectors can pose. So the aspect of financial sector stability itself. The third is a roadmap. A roadmap would necessarily include all the pillars which need to be actually put into solid foundations. Now, these could relate to capacities of financial institutions. These could lead to, having development finance institutions with clear mandates on ESG or sustainable finance, and things like that. The second point that I would like to elaborate in the beginning is that when we look at sustainable finance, we can look at it in terms of 2 baskets, just sort of coalescing what my opening notes were. One is on lending by banks, which is bank credit. Second is also the space which the fixed income market comprises. So these are bond issuances, and we have seen that they have been, globally, if you're speaking of, thematic bond issuances, which include green bonds specifically, then they've already crossed about $1 trillion USD benchmark last year. And COVID basically saw the surge in ESG funds and ESG, portfolios within banks like never before. So it is for us to also step back and think that a health pandemic basically became an economic challenge, and does not limit itself in its causes only to the surge in virus, because if you really look at it, it is rooted in the absolutely immense amount of environmental degradation that has been going on, and various other factors that have led to the zoonotic diseases to come about. Two more points. So SEBI, as we know, has already produced guidelines on green bonds. There is a business responsibility sustainability reporting framework, which is version 2.0 of the previous business responsibility reporting framework, where 1,000 listed companies, including financial institutions, will be mandated to report on. So it has been a progress towards the disclosures being much more granular, and perhaps the way it has been crafted this time much more dynamic as well. Coming to the point of disclosures, Shreya, your research reveals, how banks have been performing. I was trying to get some data points in it, but briefly, the 2019 study, which I just, stumbled upon, shows that financial institutions' disclosure environmental aspects is very, very meager. And public sector banks, which form 70% of the space, are usually commenting and disclosing on the social aspects. So these are generally the trends within India, but internationally, we are seeing financial institutions using ESG as a capital raising strategy for themselves, as a risk management strategy for their portfolio. And the second aspect on the financial sector risk and stability side, central banks are coming together in what is now called a network of greening the financial system, which started with just 18 banks and now up to 80. And they're extremely proactively, it is an informal group, but extremely proactively looking at what might be actually the pathway to more regulation in the coming times. So with this, a very broad brush of what is happening, and as we move into the conversation, we'll probably get into the details. Since our topic is the practice of sustainable finance, I will bring on the practitioner herself, Shalini. Thank you for joining us today. And I would simply begin, straight away with the question that with so much of talk happening, what has been your strategy as a bank to look at ESG? And in your sense, does COVID make a positive pressure point, or it sort of deviates from, the ESG becoming more core to your operations? Thank you.
Thank you very much, Neha, for the introduction as well as the setting the context. Thanks, Shreya and Priyamvada also. Just a clarification, I think Shreya mentioned I come from IDFC, I think is what she said. I'd just like to clarify for the benefit of the audience that I work with Federal Bank, a leading private sector bank, and with a presence across India. But just delving straight into the topic, Neha, I think banks in general and Federal Bank also has for long done a pretty good job on the wider ESG, but in particular on the S&G aspects of it. So if you look at it from a cultural aspect, a lot of work done by banks, and Federal is no exception to that, on corporate social responsibility. What are some of our commitments? What do we need to do? So as an example, Federal Bank just a couple of weeks back has tied up with Network 18 on something called Sanjeevani, which is a India-wide vaccination awareness accessibility framework. So I think the social aspects of it, we understand very well. We do a good job. We report it in the annual reports. And I think Shreya mentioned that. Governance is obviously core to banks. We've been, how we do our audit committees, how we do our boards, how we ensure diversity in our boards, etc., is also fairly intrinsic. But I must admit the E part is still evolving, the whole environmental. So if you step back and look at ESG in its entirety, and you put it on a continuum, you will find that E is probably at the lower end of the continuum, the start of the continuum. S and G have advanced. And I don't mean just in terms of reporting, but in terms of the culture, in terms of the embedding this into the DNA of our employees, working where required with customers, with things. So that's really where, you're starting from there. But on the environment piece, I will be the first to admit there's still a lot more work to be done. And that's true not just of Federal Bank, but of other banks also. Having said that, while we have not had a formal kind of sustainability agenda, I think intuitively all of us have been always doing it. So as an example, we do lend to kind of hydroelectric projects. We have a part of our portfolio that is devoted to that, devoted to solar, devoted to wind, etc. Where I think things have been over the last couple of years have evolved a lot more within the bank, and I'm now talking specific to Federal Bank. We've recognized the fact that this is, an emerging area of the bank of finance that we cannot ignore. Ignoring it will be to our peril. There is no way we can. I think, given the environment that is, given the fact that India has been a signatory to the Paris Accord, and given all the stuff that is happening, there is no way we can ignore it. What we've done, therefore, is to make sure that we align ourselves to what is happening from a national and an international level is we kind of, call it the greening business. And we've got a kind of literally a team of people across both our risk management units as well as our frontline customer serving relationship managers. We've now got to a stage where we've got a fairly strong strategic plan and how do we go about identifying business and strategic opportunities for the sector. So we have a very robust plan that has been put in place. I think Shreya mentioned the fact that there's still a little lack of clarity as to what you call sustainable finance, what do you not call. So the taxonomies have to be standardized, etc. Within those constraints, within those boundaries, we've got to a stage where there is a fairly robust set of internal, at least, metrics that say this is how you will look at a business, this is how you will ensure that the business meets the requirements from a strategic environmental perspective. These are what you literally have to make sure are non-negotiables when we talk. And we've put that plan in place, and we've got a set of people who are now trained on it. We've trained our more senior people who deal with corporates. There's no point training our 12,500 staff on it. It's unlikely they will be ever able to. At some stage, yes, we will get to that. But right now, the focus is on a set of about 300 relationship managers who deal with large corporates, who deal with this on a day-to-day basis, and their a fair level of training has gone into making sure they're able to identify the right opportunities. And when an opportunity comes by, look at it to understand how does this meet the requirements. Is it will it pass the test of sustainability? Will it pass the test of environmental goals? Will it pass the test of climate control, carbon emission, etc.? In parallel to that, our treasury team has advanced in its journey of looking at how do you invest in more green bonds. So they are perpetually on the lookout for making sure that there are green bonds. That's handled by our treasury team. I was just reading some statistics the other day which said that internationally the global kind of ESG assets, which I think you mentioned was a small figure, but by 2025 is expected to be $50 trillion. And is 1/3 of the total global assets that will be under management. So it will be to our peril if we didn't recognize that as the trend. So our treasury team has been gone through a fairly rigorous awareness, familiarization, training program to identify it. In fact, in the last 1 year, I think the number of ESG bonds have doubled in India, doubled in the last 6 months. So, so the whole philosophy has been around get it culturally ingrained in people. It cannot be episodic. It cannot be something that we do as a hobby. It cannot be something that is, an incidental to our lending business. It's got to be ingrained into our lending business. It's got to be ingrained into our investing business. And that's how we've approached this. As I said, we already have assets under management. Since we're in a closed period, I won't be able to reveal the numbers, but when the investor presentations are out next month, we will see the numbers that we've already got. But we already have investments typically into things like hydroelectric, solar, etc. There is another angle to this, Neha, which I think people don't recognize enough, and that is how much we do internally within the bank with our customers, which is less about the sustainable finance from a lending perspective, but moving customers on the digital journey. Because every paper saved, all of us know, is a huge benefit from an environment standpoint. So while I know the topic today is sustainable financing, for a bank to be able to do sustainable financing, also have to make sure they have the right metrics in terms of digitization, etc. That's, I think, far more advanced. So as an example of a bank like Federal Bank, about 86 to 87% of our transactions are digital now. There is no paper involved. There is no customer coming in with a check. There is no customer coming in with a paper which says, transfer funds from A to B, etc. All of that, 86% of that has moved digital. And that, if you were to turn that around and compute it in terms of carbon footprint, will be a huge sum of money, because it makes a difference. So that's really where the agenda is. The agenda is around embedding this so that it doesn't become just something that we do as a hobby, but it becomes thing. We recognize the importance of it from a business standpoint. We recognize its importance from our contribution to the larger economy. In terms of, I think, your point on COVID, how it has influenced the strategy, I think, no conversation is complete nowadays without a mention of what we're doing from a COVID perspective. Clearly, I think COVID has brought it to home a lot more closer. A year and a half back, I don't think, I'm not saying we didn't think about it, we did, but I think right now, I think it's embedded in all of us now that, COVID has really meant a thing. The resilience of some of the ESG investments we've seen, the general kind of heightened awareness amongst our customers, heightened awareness amongst our staff has really been a boon to this entire subject of, sustainable finance. So yes, COVID has much, all of us wish it will end as soon as possible. Absolutely. But in the meanwhile, I think we've done. Also, COVID's played a very big role in the whole digitization that I spoke about. A year back, about 76, 77% of our transactions were digital. But in the last 1 year, it's gone up to about 86, 87. And every month we're seeing an improvement because customers find it difficult to come to the branch and we have adequate digital channels. So I think it's never one thing that will make a difference, Neha, in a journey of this kind. It's a long journey. You have to do various things at various points in time. But the overarching theme for us has been, are our people equipped well enough to understand this and therefore look for opportunities of that?
So thank you, Shalini. And before I go to Mr. Tansale, I am tempted to ask you a more broader question, if you could answer more broadly. Now, with the COVID emergency almost setting in and, a whole lot of financial measures being taken, including the moratorium, etc., would you think that there is a possible rise in NPAs once that sort of lifts, and that could again impact, banks' strategy towards keeping ESG again to some, another, push it back for some time and then address it? What is for the financial?
So Neha, I think it's a fair point that the industry as a whole, banks in general, will see an increase in NPA. There is no doubt about it. You know what the market is going through. The moratorium has been done and dusted. There's been a fair amount of restructuring. The restructuring window for retail is over. The restructuring window for MSMEs are still open. And the Supreme Court verdict, which lifts the ban on declaring NPAs, has also been lifted now in March. So yes, I think over the next 2 to 3 quarters, we will see an increase in NPA. But I think your broader question as to whether that will impact the lending, my personal view is no. And the reason I say that is because lending in general will start coming back. And with that, I think people are looking, at least banks like us, are looking for opportunities that are more sustainable in nature. So clearly, I don't see a big impact. Yes, maybe a couple of quarters has been kind of impacted by all the stuff that is happening, the NPA, but I think we'll be all back in another few months. I think lending itself is looking up. Retail lending has already started looking up. We can see the signs. I'm ignoring the last 15 days. Yeah. Even March was touchwood pretty good from a volume perspective for all banks. So lending. So yes, NPAs will rise, but I don't think they will reach a stage where banks will have to be constrained to. I think there are, capital requirements. There is adequate liquidity in the economy, so capital will be available, and I think we'll be back at that.
So that's a promising note to enter into my second question, and that is to Mr. Tansale. As the CEO of IBA, you were a critical actor in the ecosystem. And as an enabling institution, just similar to the role that other enabling institutions like regulators, etc., play, we have seen that since 2015, there has been, rise and rise of ESG, if one could put it in a short manner. And yet, we do know that there has been a degree of slow adoption, which now perhaps may be changing, but also within the adoption, as Shalini just mentioned, that SNG is perhaps on the better side, but E is pretty weak. But keeping how you have been looking at the entire system, and post IBA, you've also been engaged with companies, with entrepreneurs, and with supply chain, and you're seeing from a variety of perspectives. What would you say has been, or what should be done to accelerate the adoption of ESG within the banking system and within financial institutions?
Thank you, Neha. Thanks for an opportunity, and I must sincerely thank the audience who are evincing interest in the sustainability as a subject, because unfortunately it is still being treated as something different, something new. And to me, probably it's a part and parcel of day-to-day living, day-to-day activity for everybody and anybody. Neha, you have been a part of our effort from GIZ when we started talking about the sustainability at the IBA level, the entire banking industry representing the different sectors, private sector, public sector, foreign bank, cooperative banks, everybody participated. As IBA, we also participated in the UNEP India chair, and there also we had a lot of inputs uh, from the banking industry, and we came out with the voluntary guidelines for the responsible financing. Now you will ask me that why it is voluntary. I mean, that is so. Let me tell you that, to be very frank, as I said, that the ESG, if you ask me, environmental, social, and governance, is intrinsic to the banking itself. So saying that it is something new which bankers have to adopt is something. I mean, I don't really go with that totally. I would like to cite few examples before that I go ahead. Why it is intrinsic? I'll give the example. I was a branch manager. I'm telling you of 80s, and in Union Bank of India, when we were supposed to do the industry visit, we were supposed to create a visit report. And in those days, in my visit report, there was at the end of the report, there was a column, what are the social welfare activities for the labor, including the facilities which are provided to the labor. Maybe those days crash may not be the part of discussion, but the residential, water, sanitation, and all those activities were there. So let me tell you, it is an intrinsic, because as a banker, I am not a lender like a money lender. I am an interested party in the growth of an enterprise for which I lend the money. It means I should be interested in everything around which is going to impact. It means the environment, it means the social, it means the, so I mean, when you talk of environment, I think we are all probably asking for the clearances of the environment and the pollution control board right from early 80s for any industrial unit to be put up by us. So, I mean, some of these practices, they were definitely not as structured what we have developed as the responsible finance guidelines, but they were very much there. Let me tell you that the banks have been a part of water and waste management right from early days. Probably we are the bankers who have funded all waste, what do you call, the waste treatment plants in Tirupur and various other places wherever the common problems have been seen. The waste management, I think JNURM was launched somewhere in 2006, 2007. And I remember as a banker, we have done the financing for the waste management, converting waste into a productive activity and all that. So having said all that, it's very, very important for us to understand that these 8 principles on which the guidelines have been created, they cover ethical conduct and ESG, integration of ESG risk management in the business activity. Now, what are those risks which should be really looked at? They are the physical risk, what could be the impact of the environment, what could be the impact of the climate, the financial risk, that what is going to be the impact of it, And I think there cannot be best example than the pandemic when all of us are seeing the financial risk because of the regulatory risk. We have seen n number of our projects are stuck because environmental clearances were not available. The land was not made available in good time. There have been a cost overrun. There have been the time overrun for completing the project, and the litigation, and a lot of litigations were there. So to be very frank, all these things are very much there. The only thing that these guidelines, which have been rolled out voluntary, have been adopted by each bank, and each bank is trying to see that how this can be structurally factored. I'm happy that you heard from a practicing banker. I'm a retired banker. A practicing banker, Shalini, she has come out the way they are really working with. On the same lines, as I understand by being in the system, that the banks are really working to see that it gets integrated in their strategies for the business growth. It gets integrated in the risk management practices. The only fear which I have in mind, let me tell you, that the moment you make it mandatory, will there be denial of credit to many corporates and many SMEs who are not really aware of it, who will not be able to comply with it? And thus, let me tell you, while lending is one part of the whole game, the whole ecosystem has to get aligned to see that this lending is really, which is coming from the bank or financial institution, is addressing the ESG issues. And ESG issues, as I said, are the intrinsic. If I'm financing for a real estate, I must make sure that the green approved buildings are only financed by me. If I'm financing for, yesterday only I read that only 4% of the agriculture farming is complying to the sustainability norms, and the people, there is huge scope. So the only thing that what is required to be done, that while the banks should adopt it at the board level, the board supervision has to be created. The policies with a little flexibility will have to be developed. What is the advocacy which I would like to do here is that now 2017, the voluntary guidelines were rolled out. The 4 years have gone by. No doubt, this is a challenging time. Probably it may not get a priority. But then the organizations like yours and Oxfam and all, you must do some kind of a gap analysis, that what exactly the bank should have done looking at these guidelines, and what has been done and how it can be implemented. Because unless you are in a position to roll out a good execution and implementation plan for the front office guys, I don't think that only policies are going to help. And that is what is my advocacy, that IBA should also, you should all help IBA in doing this gap analysis, should see that what practices can be made mandatory, what practices can be evolved over a period of time. As I said, that you will have to, divide this into, as rightly said by Shalini. Now, the kind of a digitization which is happening in the banking industry, the processes and products which are being developed, it's all supporting in reduction of carbon footprint. Am I right? And it is also helping out the customers. I'll give you an example. Let me tell you, this was bugging me, that why so many migrant laborers are going out. Had the lender or the investor would have taken care that this industry needs these many migrant labor, and what kind of a arrangement this corporate has done to see that the migrant laborers are supported, not because of pandemic alone, but at least after the first wave, this should have been ensured. There should not have been any migration going forward. But it's happening. It is impacting the productivity. The moment productivity is impacted, it is impacting the repayment. You already said NPA. Mr. Khan has yesterday said that NPA will go up to 16 to 18%, the former Deputy Governor of the Bank of India. And thus, let me tell you that the ESG should be accepted as an intrinsic activity of the lending by the banks and the financial institutions. The only thing, how it can be structurally adopted and implemented at all levels, will have to be think so that there is no denial of credit, there is a proper implementation, and there is encouragement for the bankers to really adopt it. I think this is what I would like to say. RBI had rolled out the sustainable guideline in 2007. Now 2021, the fresh guidelines on green finance have been rolled out. But then, say, what happens? Guidelines at the macro level, unless they are addressing the micro level implementation issues, it is not going to help, and you will again say slow adoption. So yes, I agree that there is a slow adoption, but the slow adoption is because of integration for being implemented at the grassroots level. Now let's talk about the MSME. Now we are financing in the clusters. Now those clusters, they should be ESG friendly. Whose responsibility is this? Is it only the lender's responsibility? Or it is the state government, it is the central government, it is the MSME department, and so many other stakeholders are there. And that alignment has not come. Everyone talks ESG in isolation. I feel ESG is an intrinsic part of everything, and that is what is my viewpoint. Thank you, Neha. I think if I have covered what you
Yes.
expected me to say.
And you have raised some very important points and questions. I think a couple of which I will take this opportunity to right away paraphrase it, perhaps for Shalini and then for Devyani. One is the question of alignment between different stakeholders to really make ESG a reality. Second is the point that Mr. Tansale raised about a very practical problem that emerged during COVID, which was of migration. Yeah. So while we do expect businesses to be much more responsive to their supply chains, to their labor force, but we really did not see anything happen on such emerging, very pressing problems of the day, which basically have impacted the entire economic activity. Now, even if Shalini, my question is to you that, if you want to respond to this migration question specifically, the floor is yours. But a question that has come to me, and I will put it right now over here, that Director AIF is asking that if you could share with them some example of a project sanctioned amid the COVID time that you're proud of and which aligns to ESG, something that you can share with us.
So I think, like I said, we are in a closed period, so I don't think it would be fair for me to comment on specific projects, etc., because till our annual results are declared, I have to keep myself under a thing, so I won't. But what I can definitely talk about is, broadly speaking, not specific to the COVID period, but broadly speaking, we have been looking at projects from an ESG angle, from an environmental angle, and looking at opportunities to invest in them. I think you have a question a little later about some of the challenges we faced. I don't know whether you want me to address that now or I'll come to that. But I think what we are really proud of during the COVID period is probably more about what we've achieved on digitization of our customer transactions. And Mr. Tansale referred to it to say that is also an impact on the environment. One paper less means one a contribution from a carbon footprint. And that's clearly something that I think all banks in general and Federal Bank I can speak for Federal Bank myself, have been quite proud of. We've been using this opportunity to literally educate customers. And remember, we have customers like you and me who are quite familiar and can use our net banking and mobile banking, but we have MSMEs, we have the rural labor force, we have large corporates who have been struggling with trying to find out how do you do a trade finance transaction over an electronic platform. We have a range of customers, working with them to migrate them to more digital means, migrating them to the use of internet, mobile, etc., and thereby saving paper has been something we've been very, very proud of and achieved a lot on. Specific on projects, I think, Neha, I'll have to defer that conversation because I'll probably be able to do it after the second week of May once we declare our results.
Sure. So one thing definitely, as I think there is a lot of activity happening within financial institutions. There is less of a documentation. There is less of sharing of good practices for people to learn from each other. So this is something that I think it's more awareness, more knowledge sharing. I mean, there can never be enough of it. We are at a stage where we have to learn a lot. So Devyani, I will come to you at this point. And if you could actually shine a light on what does it mean from the borrower side. You've been working with SMEs. You have been working to educate them how ESG could be an enabler to accessing more finance. What have been your learning, and you think that they really get what is being talked about? Do they see it as a business case themselves? And really, just if you could give us your assessment of, or point us that how could this be really a win-win strategy between the lender and the borrower?
Thank you, Neha. So thank you to the organizers for giving this opportunity, and it is a pleasure to speak after Ms. Shalini and Mr. Tangsale. I think they touched upon quite a few interesting points, and music to the ears when I heard that ESG is being integrated into the very core of the organization, because I think that's really important. And Mr. Tangsale touched on some very important points about all stakeholders being involved, right? It is not any one entity's conversation, right? And unless we are all in it together, we are not really making it very far. I've had the opportunity to work with SMEs and SME borrowers. So I think a few things before I get into the question, Neha, that you posed, and some things that I would like to reiterate from what Shreya said, what Mr. Tangsale said, that there needs to definitely be more focus when we're looking at financing and lending on the social aspects, because if you look at the whole migrant crisis, there is a lesson for all of us to be learned. Now, it would, like you said, I don't think we can say that it was entirely the businesses who had to look at it or the financiers, but I think it was a combination of many things. And what is very clear is that businesses, lenders, policymakers, everyone needs to come together and understand that there is a huge gap here, and that needs to be addressed. Now, just understanding from the borrower's perspective, I think first I'd like to know that when we've looked at sustainable financing, right, what does it mean from a bank's perspective? I will speak more in the context of lending and to SMEs, so I will keep that focus, that typically for the bank, it has been addressing their risks, lending for certain technologies, lending for certain products, right? But I think there's always not been a narrative for the SMEs that what could sustainable finance mean for them in a growth journey, right? So there is a need. I find that there is a mismatch on when we are building capacities of the financial sector actors on ESG and lending, that it is not always matched with equal awareness, capacity, opportunities in the SME sector. Or if we have looked at, creating awareness in the SME sector, that it's not been supported by the right kind of products, for them to embark on this journey. So to me, I think first of all, there has been a mismatch between this whole conversation on awareness between SMEs and what this could mean for them, and what sustainable finance, it's really a journey. I think Mr. Tangsale brought this point, and it's a very valid concern, that what is sustainable finance aiming for? Are we looking to lend to organizations who are already doing well on ESG factors, who have that thinking, who have that vision, who've put that into play? Or are we looking to work with organizations who have the potential to make this journey, right? And can achieve great wonders and help in our own national, international commitments when we talk about it. So I think first we have to be clear that this is a journey for the borrowers, right? And unless we are creating the capacity between the SMEs, we will not even make much headway with sustainable finance, because nobody is going to ask for those products. If we don't create that awareness, what does it mean, right? So that is one. Two, if I look at it from a financial product perspective, now how is an ESG or a sustainable finance product any different to a borrower than other products? Let's try and understand, right? It is supposed to link to their ESG journey, which may or may not happen. Are they looking for cost of financing? It's not necessary that ESG finance products have to be cheaper, because there is a business case for ESG. Adopting energy efficiency is a good business case for borrowers. So it need not necessarily be backed by a cheaper financial product, right? But what could be done, which has not always happened, is can it be more easy to access? If we still have to spend 6 to 8 months trying to close a deal, it is a dampener for SMEs, right? And they are not always able to follow up through on this, right? And then can we also look at, I would not like to go on a nitty-gritty, but when we talk about sustainable finance and we would look at products, we would have to look at innovation. A typical example you will always hear from SMEs is, where will we bring the collateral if you're looking for a solar rooftop system? Right, energy efficiency, it's machine, it is asset-based financing, it's dented. But we've had cases where SMEs have come forward and said, we buy into the business model of a solar rooftop system, we've done our calculations, we are totally bought in, but I am not getting financing without a collateral. And when you hear them say, oh, if I want to buy a luxury car, I will easily get a loan for that, but I will not get it for a solar rooftop system. I'm not saying that answers for this are outright available, but these are genuine concerns. This is an asset which is not contributing to production, and if they have to put up additional collateral, they will not come forth to make these investments, right? So we have to look for, of course, the bank has its own risk systems, it has its own risk assessments, but how do you start aligning the two? That is something that we will have to keep having a conversation on. Then I think in this whole journey, where do you build the trust between lenders and borrowers, right? Now, we have to involve the borrowers quite early on in the conversation when you are looking at sustainable finance, right? I quite like the responsible finance guidelines, but where do we start involving the borrowers, the SMEs? One of the things we used to hear, and it's interesting, Ms. Warrior mentioned about that, you would look at your corporate clients, you would try to look for business opportunities. Now, when we looked for this approach with the SMEs, there is a mistrust that, oh, there is a target that they need to achieve, and this product is being pushed towards us, right? So there is a complete lack of trust, because the banker here is trying to make the SME understand that, look, there is an opportunity. An investment into a solar rooftop system actually means a better impact on your bottom line. Your energy bills get positively impacted. But they're at the back of their mind is they need to sell their solar product, and that's why they're coming and telling me. So where do you start this conversation? And there are many platforms, there are cases where when banks have worked with SME associations, where they've developed partnerships, they've had clear roles and responsibilities, it's been easier to place these conversations. But what cannot happen is probably that you have a product, you have something, but you don't involve the SMEs early enough. Or we've had where the products are available and the SMEs are not aware that such products are available, and you need organizations who can facilitate communication. Now, this communication, knowledge sharing is not just between one financial institution to another, it's actually amongst all the stakeholders. Right. And if you're talking about sustainable finance, you're also talking, and again, Mr. Tangsale touched upon it, there are so many things that need to fall into place. Right? Is the technology there? Does the policy support? Right? Sometimes there is so much option in technology that there is no understanding, or there's no bandwidth for the SMEs to understand that which is the best technology, where should they invest. And there was a very interesting model that SIDBI's ISTSL had done, which was exactly this, that can we handhold SMEs? So they had sustainable finance products. Can we handhold the SMEs and provide them services for a robust implementation of these programs? Can we aggregate demand? Because an SME on their own, one SME may not be able to do, but to make it easy for banks also, can we actually start aggregating demand? Can we start looking at cluster level, like Mr. Tangsale talked about? Some of our more effective implementations were when SME association heads actually drove programs. They set targets and said, okay, as a cluster, we want to showcase, we will look at 10 megawatt of solar rooftop in our units. Let us work with the banks. Let us work with the technology providers. Let us look at the awareness amongst our units, and those kind of things work. And all those elements need to fall into place if you are making it, if you want to make it work for the borrowers. So those are things that we should probably keep in mind. And also, unless, at an SME level, and here I would differ a little with Ms. Warrior, because she talked about not educating all the bank officers. Totally with you that in the short run, probably not. But when we are looking at the SME clusters, it is actually the person on the ground who has that relationship. And that is where it needs to flow backwards, because we've also seen cases of the branch managers having excellent relationships, but they are not always able to take that information or approval towards the headquarters and get that approval for a product, and to take a transaction forward. Or information just doesn't flow, So we've also seen cases where there have been products developed, there have been commitments made at the headquarter level, but nothing, absolutely no information and no action at the branch level where the SMEs are. This is a humongous task. We understand the challenge. This is a humongous task. And what perhaps could also be looked at is pilots. What can be looked at is there are always branches, there are always clusters which are willing to take a lead, which are willing to take that plunge, and you need to create those stories, you need to create those case studies, and you need to keep communicating. Because one of the biggest challenges that you find with banks also, you find with SMEs also, has somebody else done it? Do you have numbers you can share with us? Can you tell us, what the risks are? And the more we document, the more we are making it easier for us. So, if we try to do everything at the same time, we will not reach anywhere. We have to identify those champions. We have to identify those clusters. We have to identify those bank officers also, who are willing to take this journey, because the converse of it is also true, that if there is not enough information with the bank officers or bank managers, they can actually sway the discourse on sustainability the other way as well. Without naming as well, I have seen such examples where borrowers have been told, why do you want to invest in solar rooftop? It doesn't work. It does not give you payback, right? So there is a need to keep that information flowing. And SMEs are beginning to change. There is a growing awareness because of trade, because of their buyers, because of brands, because of the supply chains that there is an increasing awareness about the need to be sustainable. We see this in conversations that we are seeing for some water related projects also, right? SMEs have invested into try and understand what are those technologies that can help me reduce my water consumption. But there is no financial product to support them. There is no policy that recognizes this, technology and gives it. So there is a whole plethora of things that needs to come into place. I think you also had a question that post-COVID recovery, SMEs have struggled. We all know this, right? And this is a challenge. Can we actually look? And to me, sustainable finance cannot be independent. I don't think there is anything as finance and sustainable finance anymore. I think all kinds of financing now has to be sustainable financing. For how long are we going to keep the two separate, right? So any kinds of financing, and this is a good opportunity to actually say that as we help the SMEs build back better, can we start integrating this ESG, but with a very clear understanding that this may be a slightly slow journey. They will need to be handheld. This may, we have to build in, and they may need a lot more financial support to integrate these ESG parameters, but it definitely can be done. It has been done in bits and pieces, and I think now is the opportunity to really do it at a much larger scale. So I hope I've put some points for consideration.
Thank you for laying out the landscape of challenges.
Neha, if you permit, I'll supplement what Devyani has said.
Yes, sure. Yes, sure. And if you permit, I will go straight back to Shalini on this question. And what basically, in a couple of points, if I could summarize Devyani saying as that there is an asymmetry of information between corporate headquarters and the branch officers. That's one asymmetry of information. Second is just the understanding of what sustainable finance is, how this is a win-win between the lender and the borrower. So within the institution there is asymmetry of information, and definitely outside the institution between the lender and the borrower there is a gap in trust, a gap in understanding. So we just somehow can't bring it all together, or haven't been able to till now. Now, my question to you is that in your journey on ESG, and also looking at what kind of ESG embedded products can your bank come up with, what is the kind of challenges that you've been facing in this journey, and can a bank like yours and other banking institutions are they in a position to take on some additional roles? Perhaps you do it in terms of educating the customer. Can there be advisory roles that the banks could actually really build as a vertical? So to complement product creation and product adoption, so to speak. So if you could just speak to this, Shalini.
think Mr. Kansale wanted to kind of add to what Devyani was saying, so maybe I'll go ahead after that. I think he had a kind of supplementary point.
No, no, I just wanted to supplement what Devani said, that it's true that there is nothing like sustainable finance being different from the finance. Finance, whatever I do, has to be sustainable. To be sustainable, it has to be cost efficient. And in order to see that whatever lending I do enough due diligence, and this due diligence, we can integrate the ESG factors into the due diligence part of it. And at that level, if I tell all the MSMEs that look here, I have also worked with the Energy Efficiency Bureau closely at the IBA, that every borrower from the MSME or the corporate sector has to really be driven towards that. How is it that he is adopting the energy efficient methodologies, including the rooftop? And this rooftop should not be treated as a separate lending product. This should be integrated with the overall lending. If that is done, I am sure it will work very good. With regard to the training part, let me tell you that there is no separate training required for ESG. But as I said, it is intrinsic to the lending. If the factors are included into the various training modules of the credit, MSMEs, risk management, I am very sure that by default it will gradually be adopted. As I said in the beginning, there were no structured efforts. Now you need a structured efforts. Over to you, Shalini.
Thank you very much. Yeah, so I think Devyani has articulated the challenges from the customer standpoint. Clearly, yes, there are challenges, but I think as a banker, I would also have a set of challenges of my own as a banker. So let me try and see how best we can bring all of it together. I think the first thing that which I alluded to earlier, and I think all of us are saying it, is how do we get to a stage where we recognize this whole aspect of what is sustainable finance? At one end of the spectrum, it could be, I finance EVs and hydroelectrical power projects and solar power projects and wind projects, etc. Yes, that kind of long-term sustainability. At the other end of the spectrum could be financing a corporate who's into oxygen cylinders, the most topical subject right now. But as long as I'm convinced that that corporate has embedded the right practices, is energy efficient, is doing the right things from a labor workforce, etc., would that constitute sustainable finance? Currently, today in the banking sector, the second example that I have is just normal lending. It's good practice. As Mr. Kansale rightly said, years back in a call report, you had to write what are the kind of measures that the corporate has taken, how kind of is waste lying around, is there a pollution control board certificate, are there fire extinguishers around? So I think the first thing that we all have to grapple together with, which is why I'm happy with what Shreya said at the start, is get a consistent definition amongst all of us on sustainable finance, amongst all the bankers, so that we all are onto a level playing field. The second is, of course, Neha Devyani, at the end of the day, bankers also have to generate returns, right? We have a set of stakeholders, we have a set of shareholders, whether it's the government or private. We have a set of shareholders. We have to pay our depositors interest. We have to pay our depositors the principal back. We cannot afford to I think that it might help if there is some kind of, I hate to use the term incentive, but some kind of a program of work where government could step in and say, yes, we will give you some kind of a guarantee. I think a very good example is what the government did during the COVID period, where it came out with the GECL, the Guaranteed Emergency Credit Line, where there was a guarantee created, a guarantee corporation created, and therefore banks, like all of us banks, were able to lend with a little more of think awareness at the back of the mind that we will not be held back due to a looming NPA problem. So I think the second one is this is particularly important because of two other things that are linked to it. One, most of these, whether we talk about solar or a thing, have a long gestation period, Neha Devyani. They will not pay returns of, typically we expect paybacks. If I put up a branch today, I expect a payback in 2 years. The branch has to start paying back in 2 years. these are long gestation periods. They're not going to pay back in 6-7 years is probably when they will. So there is that element. And there is the second element of it, which is the fact that there are no typical rating models for these. We, a CARE, a CRISIL, etc., don't have typical rating models which say, okay, this is how they differentiate on the basis of sustainable. So given these two issues, some kind of, I don't know whether it is an incentive or some kind of an umbrella that tells us, okay, you can go ahead and lend with, there will be risks, yes, no doubt about it, but at least the risks are mitigated to some extent. That will give us confidence. So I think that's the second thing that will make. The third is for all banks, including federal, 1/3 of our portfolio is MSMEs and SMEs. The corporates and the retails are typically, by the nature of the economy, they are a thing. And there, I think Devyani's point, how aware are MSMEs, SMEs of their role in kind of, environmental practices and the right environmental practices, the training for them, the hand-holding for them, all of that stuff is a fairly large kind of mandate that banks alone cannot take up. I think it's unfair to expect banks alone to be able to take that up and do it. So there is that whole training element of it. So I think it's the combination of all these that has resulted to some extent in the lack of trust. Now, do we have all the answers for it? I don't think we have all the answers, but I think we're doing the right things to get there. I think if we can work on standard taxonomies, standard definitions, then we'll all be on a level playing field. So my 100 rupees of sustainable finance is equal to bank B's 100 rupees is equal to bank C's 200 rupees is equal to something. 50 rupees. So my investors all will have a standard plain thing, because today investors are very, very keen to understand more about ESG. So I think that standard taxonomies will help at the risk of sounding, very, demanding. I think something around a guarantee kind of a scheme, something around some umbrella of protection, because at the end of the day, remember, if something goes wrong and it, God forbid, becomes an NPA, bankers are held responsible. There's no doubt about it. And I think the risk is much higher for public sector banks, where they go through vigilance and, a whole host of things. So something around the fact that, yes, as long as it's been taken with due judgment, it's okay. The third is development of rating models. If if our rating agencies could get together and develop some rating models. And the last but not the least is the training element of it is something we have to collectively do between all of us here on this and the wider audience. How do we get more training around it? So I think these things are what we should work towards. It's a journey. I think it'll, CSR, for example, 10 years back was not as evolved as it is today. Today, I think all organizations, institutions, etc., are very confident of their corporate social responsibility, know what they need to do. So this is a journey, and I'm fairly confident we're making the journey in the right form. We will get there. It will take effort, but collectively we will get there.
Thank you, Shalini. And I think the very important point that you raise is that of forming alliances of champions, because that's really what is required. You'd be happy to know that some of us think tanks, including Devyani's current think tank, we are, on this working group with the Ministry of Finance. And there the debates are exactly this, how do we, not only environment, but what kind of social aspects need to be integrated and raised to the level equal, so that this integrated approach towards sustainable financing is important. And it's not an easy thing to do, because there are many, how do you, is the environment come first, does the social come first, so those kind of things. But what we are beginning to agree on is that if we can see the benefits, co-benefits, and trade-offs between these different factors, it at least presents a better picture to the lender that, which way to go. And definitely organizations like yourselves, I'm sure the MOF will engage with as many financial institutions once it is ready with the draft and when it comes out into the public domain. So we hope that we are able to have this exchange, not at the end of the process, but through the process, so that we come up with much more robust definitions. The one point that you mentioned, and I will just take it up over here, is the fact that you had mentioned it earlier that you're using also instruments like green bonds. Now, they are a very good refinancing strategy for for a bank. You know, it offloads the balance sheet. It can actually then use the use of proceeds mechanism to actually invest or lend to programs which are green or sustainable. Of course, again, if you label yourself as a green bond, you have to tell how that activity is green enough. So again, you need the definitions. So I'm very happy to know that you are actively engaging on that front as well, and I hope more banks do so. Mr. Tangsale, coming to you now, your current engagement with a lot of smaller entrepreneurs, so I just wanted to ask you, how do you see the interaction between banks and those entrepreneurship networks going forward in order to mitigate the risks that we have just spoken of? So if you could give us your insight into this.
Yeah, technology initiatives. And in all those technology initiatives, like I am working with Swift India, Charlie knows it very well. I am with data science companies, which has a lot of thrust on the due diligence. I am with the Experian Credit Bureau. So my take here and suggestion here is that the ESG should be also ingrained in the credit bureau ratings. See, globally on the investment, unless the credit rating has got the ESG score in that. I am sure, Neha, you may be aware that there is a ESG score which is being used by the global investors when they decide to invest in anything. On the similar lines, can we also create the sort of a ESG score for the smaller entrepreneurs, MSMEs, mid corporates, large corporates, and this can be factored into the credit bureau's credit rating. That what kind of sensitization or what kind of approach they have towards the ESG. I would say, to be very frank, if you really divide environment, social, and all aspects, you can create a parameters around that. And on those parameters, the scoring could be done. So when I see that when we, I engage with somebody, I definitely like to say that I work on the cost efficiency. The cost efficiency has to be at the, along with the reduction in the carbon footprints. So digitization probably is the answer for all that which we are working with. But to me, most important part, which I feel that these are the very selected few. Most important is that today, whatever lending have already happened, whether those entities can be made to convert or use some of the tools whereby they are supporting the environmental aspects and social aspects. Now we are all talking about probably the new lendings. Enough has been done on the renewable. I'm sure all of you should appreciate that the lending, the way banking industry has done on the renewable, the price of the power, which was 17 rupees 10 years back, has come down to 2.5 rupee per unit or from the because of the renewable production. But on the same lines, have we done enough on the other aspects, on the water management, on the sanitation, on the various wash-related issues, that should be, addressed by every corporate, whether large, medium, or the small corporate, and it should be factored into their credit due diligence, their credit monitoring, their annual reviews. And it should not be related to only the new lending, but it should be related to the existing borrowers and existing corporates also. I think this is what, as a practical practitioner, I would like to suggest. Will it happen tomorrow? No. But is it doable? Yes, it's doable. I think this is what I like to say.
Thank you. We just have, I'm aware of the time, but we just have about 5 to 10 minutes to perhaps touch upon one more aspect of this, which is around disclosures and compliance and reporting. So yes, now you're supposed to be ESG compliant, which also means you're supposed to be able to tell your stakeholders much more than you ever did, and that has, I mean, I would like to understand it from Shalini, from the perspective of people who analyze these trends. Of course, we have certain idea, but the direct question being that in terms of disclosure to wider stakeholders, do you sometimes even have, I mean, do you perceive that ESG disclosures can actually pose a certain amount of risk to your capacity to actually capital raising yourself, because you are basically talking about your risk universe in much more detail?
I don't think so, Neha, because today, as we have discussions with investors, as we have discussions with analysts, etc., and I'm talking wearing the bank's hat, obviously. I think the discussions are all around. There are a lot of discussions around ESG, and so people our investors, our analysts are looking for more and more information and are looking for a fair level of transparency on this aspect. So I think to that extent, more transparency is only helping the matter. Yes, the picture may not be always perfect, but I think people recognize that this is a journey. As long as we have transparency, it helps. That is clearly there. There are but two other kind of related challenges. One is it has to be a level playing field, right? If I am transparent as a bank, but a couple of others are not for whatever reason, and maybe in their strategic intent to do it later or whatever, then yes, it does pose some difficulty, right? If it's an analyst who's looking at 2 or 3 banks together, one is more transparent than the other, without understanding the nuances of it, it may have an impact. So I think there is a need to get to some kind of level playing field. And I come back to the example of corporate social responsibility, because if you see how much of work has been done in terms of improving the transparency on the corporate social responsibility front. Even more recently, the January, I think the Ministry of Corporate Affairs has indicated very clearly what you should do, how much you should transfer where, and what you should say in your annual report about each of these. So I think getting to some kind of a level playing field is important. Otherwise, transparency could come to, God forbid, bite you. The second aspect of it is when I wear a banker's hat now and I'm evaluating proposals from MSMEs, corporates, etc. I think there is very little kind of public disclosures available in any of those. You literally have to peel the onion over and over again to find more and more details, which makes the credit process very subjective and elongates the entire credit process. So I think to kind of summarize what I'm saying is disclosures, we have personally not seen any challenges in that in our conversations with investors, analysts. It's actually helped rather than deter. Having said that, we are always conscious of the fact that there needs to be a level playing field amongst all the institutions, and we have to take the customers along on the journey to make it more transparent, because that helps the credit evaluation process. That's where I would see it. But I keep coming back to what I think all of us are saying. This isn't something that can happen overnight. I think, at some stage mandates will come in, and then I think it'll become literally, more structured.
Sure. So at this point, I'll just take these couple of questions that I have in front of me. And Smita Mishra from Fandoro Technologies is saying that isn't ESG really a sort of a limited universe to risk return dimension? It just focuses on that. Why can't SDGs be used as a framework? So I know it is SDGs is Sustainable Development Goals, and there are 17 indicators. They're very, very comprehensive, and the question reads: SDGs seem a more holistic framework that consider the impact one can have on community at large. In near future, do the practitioners see the banks using applicable SDGs as the frameworks, or will they continue to use ESG factors only? So again, you're coming into that universe where definitionally, what is SDG, what is ESG? Because I think they're pretty overlapping, you know. But any thought that your bank has given, or generally, even if you want to speak to this topic?
No, I think we clearly have looked at SDG, the developmental goals, the UN, the UN ones at a much broader level, from diversity to to environment to everything. But we've looked at it more, I must admit, in the context of ourselves. How are we performing against it as a bank, against each of those? And we have a fairly robust process of doing that ever so often. I have a team within my risk management team that looks at it, and we're propagating internally a lot of metrics around that. So, we have something very simple called, the goal for the month. So we kind of pick up one indicator and say, this month, let me increase the awareness of it. So we use desktop screens, we use videos, we use everything to get awareness of the people. So yes, as a banker, as a bank, and as a part of the community of bankers, as a part of the community, SDG is definitely something that we've been working on. When it comes to customers, I must admit it is still a subset of it, which is ESG more than anything else. Because I think beyond the point, as a lender, how much can I kind of influence a customer? It's not fair, also, right? I have to draw the lines as to what is. I'm interested in the sustainability of the business. I'm interested in the continuance of the business. I'm interested in. So as a banker, for ourselves, yes, it's a much broader umbrella. For our customers, I think the journey is just starting, and therefore, in our interactions with customers, it's really ESG that we're looking at.
Sure. Sure. So I'm really going to close the round, and
Can I add?
Yeah, sure, please.
Yeah. Yes. Say, ESG is a part of the SDG, and the sustainability development goal basically are getting deliberated at the Basel level, and Reserve Bank of India is a part of that. And anything which needs to get implemented at the industry level, in the banking industry, flows from those discussions and decisions. At the same time, I may tell you the industry that the IBA is a member of International Banking Federation. I used to sit on the board of the International Banking Federation, which essentially looks at the best practices globally adopted around SDGs and other things. Now, let me give the example of the way we have driven the inclusive growth initiatives in our country through the PMJDY, or the Trinity, what you call Jan Dhan Yojana, mobility. And today, with all these initiatives, we have been able to really address the pandemic issues on the transactions, on the use of technology for remittances and all. So lot has been done around that. But as I said, that yes, what we need to do is probably further, break it down to the implementable issues and implement it gradually. And I'm sure it's doable activity. Thank you very much.
Thanks. So my last question is
sorry.
Yeah.
Sorry, sir. Before you go, I just wanted to quickly comment a couple of things. I want to agree with Ms. Warrior. She mentioned, last time the challenges that the financial institution and the bank face, and totally agree with those. I think this is not a conversation of us versus them. This is a conversation that these are the challenges. How do we work together? Because I think to the point that she raised about guarantee mechanisms, very valid. Because who takes the risk? Who will come in and give extra support? Because we are saying the SMEs, the borrowers can't take it fully, the lenders can't take it. So what are those mechanisms? And there are guarantee mechanisms that are talked about, right? And for training, I think the point that I made, and I would like to totally agree that when we talk about awareness, I think the focus has to be, can we take all the stakeholders along? Organizations like GIZ, the UNIDOs of the world do a lot in capacity building for SMEs on moving on to a sustainable path, right? And can we have financial institutions in that conversation itself, right? Because the problem is that we work with banks or financial institutions at one point of time, we work with the borrowers at one point of time, and the trick really is, can we do this together? Right? Because when you've created the capacity, when you've created the interest, you move in with the entire ecosystem support. And that is when it really starts happening at a much faster pace than what we have seen earlier. I think we've traditionally really struggled with that mismatch in pace. the interest is there, the product is not there, the product is there, the interest is not there, and we sort of going round. But totally agree your point that the point is to come to the drawing board. Everybody has to understand their roles and work at it together. And I think just on the point of the ESG and SDGs, and I think Mr. Tangsale talked about it, but I think what's also happened is that the frameworks that we've had in terms of the voluntary guidelines were actually revised in the context of the SDGs, right? And nobody better than you to speak about that. And that was, and even our CSR law, from what I understand, they have mapped it to how it speaks to the SDGs, right? So various regulations or legislations that we have are also being mapped, because I'm not sure if it can be done at each individual organization level, and whether it needs to be done at a slightly broader level, for that conversation.
The SDGs, the BRRSR was revised also in the light of Paris, and we are an international signatory. We have our targets to meet. So I think, that conversation at the policy level will also start concretizing once you have a certain pathway which is sort of decided by the policy makers. Everybody will have to step up, to the game. So that direction of travel is being set one way or the other in that towards that goal, so and it may not be too far into the future that we will be asked to be and I will not use the word compliant, that we'll not be asked to be actually be very actively using these instruments to really seeing the opportunities where the capital at scale can be redirected so that the economy is much more sustainable and inclusive. And to this, there's this last question over here, which I will just take as again, a reiteration of our point. Nidhi Mohan says that, can sustainable finance be defined as financing circular business models where there is intent and action plans in place within those models to reduce and offset their carbon footprint? So yes, absolutely. And may I just take this opportunity to just elaborate on this point, exactly to the point that Shalini was mentioning, Devyani has mentioned, and Mr. Tangsale, that it is not only wind and solar. It is actually each and every economic sector which has a lot of potential if you just put that lens of sustainability. It has the potential to understand risks better. It has a potential to invest better. What we really need, and I keep on saying that, what we really need is a sustainable financing strategy, for India, which actually looks at sectors and then helps us understand what kind of capital mix, what kind of capital instruments are required to meet the financing need when we are saying that we need to be a much more resilient economy, much more environmentally sustainable economy. So definitely that sector level approach will be important. It will not be less challenging for financial institutions if there is movement away from coal into more green. What happens to that portfolio? How do you shut that down without actually impacting, a lot of things, especially livelihoods of people? So there are complex questions around it. My last question was, take your time. This is your time to tell us what that one change or step that you would like to see our policymakers attend to when it comes to really mainstreaming sustainable finance. And this is more to Shalini from my perspective, that you mentioned about capacities and gaps in capacities. If there were organizations coming forward and interacting with you that, okay, now environment is a sort of a weak area, can we work on that together? How do your stress tests look? All of that. Would banks like yourselves be ready to become part of that journey? And so the last one is more specifically to Shalini, but the recommendation bit is for everyone. Shalini, go ahead.
Yeah, I can. Okay. So to your second one first, absolutely. I think we're all, eager to learn, eager to kind of, jointly work on some of these things. So happy to kind of do. We do some work. We do some work with, EY is helping us a little bit. IFC is helping us a little bit. So we have some of those interactions there. But anything which is broader based, absolutely, we're happy to. we recognize that we don't know everything. We can't, and we have a lot of catch up to do. So happy to do that. Something I think. I think with your first part, if I were to wear purely from a banker's hat perspective, it's something that I think I alluded to earlier, and Devyani came in and kind of thing. Is there some kind of a mechanism that can be put in place which gives, I just use the word either a guarantee, incentive, something that enables the risk-taking capability to be a little more, meaningful for the bank, because otherwise it's just a lot of risk that we are taking onto our balance sheet for an area which we don't know enough about. So, I think structures around that, and I think Devyani kind of summarized it much better than I did, which is structures around that which help us to, to be a little more confident about our lending decisions will, I think, make a big difference to it. And I can only give the most recent example again of the government, the GECL, the Guaranteed Emergency Credit Line that the government did. I mean, it just made it so much easier, the access to finance so much easier for the MSMEs and the SMEs who were impacted by the COVID. Both bankers and customers honestly found it much easier to work through that process and get through that. So every bank went through that. So something along that line, which is a longer term plan, a much more broad-based kind of thing, would definitely be one recommendation if we can take it up the. In addition to that, obviously, is standardizing the definition. But that, I think, will happen. I think this is the more meatier kind of stuff.
Sure. So definitely, I have found my champion over here. So I'm going to, get our like-minded organizations to reach out to your organizations and like yours. And this journey has just begun, and it should be more concrete, more robust. It is time for action, more than pledges. So we will look forward to that. But now turning over to Devyani, who can actually tell what the government must do.
No, I am not doing what. Okay, see, I think I'm surprised that Shalini ji didn't bring this up, but a level playing field, not just for the lenders, but even for the borrowers, right? Because if everyone is asking the same questions, it's so much easier for the borrowers, right? So I think the level playing field for sure, but we really have to mainstream this whole conversation on sustainability. It is, I think we do not have the option of retrofitting it anymore, right? So we have to, yes, look at what's past, but can we really look at sustainability champions in all government offices, to be honest, right? Where do we anchor? It requires a lot of inter-government cooperation. If you are talking about these initiatives, if you are talking about this, can we identify sustainability champions everywhere to drive these conversations, right? Because whom do you start the conversation with? Do you start with Ministry of MSME? Do you start with, let's just take an example of water, right? Is Ministry of MSME driving it? Is Ministry of Water driving it? Is Ministry of, is the Pollution Control Board driving it because they look at wastewater? There are so many aspects to it, right? And I think that definition, roadmaps, very clear roadmaps, issue-based roadmaps, and champions, both at the government and industry level, I think are extremely critical. I think very clear responsibilities. I know that from an SDG perspective, that has been done. We do have champions. We do have clear ministries that have been identified on various SDGs. But I think for sustainability, I would think a lot more visibility, ownership, joint responsibility would definitely be needed. And I do not know, I mean, I will not like to speak on behalf of the financial institutions, but it's interesting to see where trends are going, right? Because if we look at New Zealand, and they have talked about how their Ministry of Climate Change is actually going to make it mandatory now there's talk that they're going to propose that all financial institutions actually have to disclose on the climate risks. So those are future trends that we are looking to, and we need to, I think we have to move beyond climate risk. Climate extremely important, and that has an impact on vulnerable, etc. But I think that is the direction in which we are moving. Can we take more initiative? I think we really need to hit the accelerator. We've been having this conversation for at least a decade since 2007, since RBI came, that I think we really need to hit the accelerator now.
Thanks, Devyani. And last word to Mr. Tangsale. Please tell us
I will reiterate my recommendation that having rolled out the 8 principles of responsible finance, there is a necessity to now get into an examination that what can be converted into mandatory guidelines, because the moment the Reserve Bank issues the mandatory guidelines, it gets factored into the various operational guidelines of the banking industry. And what Shalini said about the level playing field, that gets achieved. But what is that can be made mandatory has to be properly examined and should be evaluated with the help of the IBA on its implementation. The second part is that there should be good incentivization for the adoption of the various other uh, recommendations, where probably mandating will be difficult, because I said in the beginning that compliance of ESG should not deny the credit availability to anybody. But it does not mean that the borrower is free to do anything and does not respect the ESG. Borrower has to respect the ESG part, whether he is a new borrower or whether he is existing borrower. But this kind of integration from all the stakeholders should be done, and the roadmap should be drawn on the gradual basis. I very strongly feel as a banker it's doable over the period of time with the proper guidelines in place and mandatory guidelines in place. Thank you.
Thank you so much, Mrs. Tangsali. And by that, I am just a minute over our time. I have been able to include the questions in our conversation itself, so I'm not opening that further up. But it has been immensely enriching to hear all your views. And definitely, one of the things that Access has done, it has also brought these institutions, not only speakers, together, but also actually institutions involved in this agenda together. And I hope the audience have found this session, enriching, knowledge-giving, and I hope each one of us in this conversation can make themselves a much more engaging actor in this journey together. Thank you so much. We will be back with our interpersonal interactions with each one of you, and good luck to Access, and congratulations for organizing this. Very, very
Thank you. Thank you very much. That was very interesting. Neha, Devyani, Mr. Tangsali, thank you so much.
Pleasure meeting you.
Thanks,
Take care.
Thanks,
Bye-bye.
Bye-bye.
Thanks.
Yeah.